Hi, I'm Peter Jones, Chartered Surveyor, author and property investor.
A question I'm quite often asked is, should I still be buying my properties using interest-only mortgages, or has that all changed now because of Section 24 and the tax changes? So let me just sort of quickly start by prefacing that with a quick comment. In the lending world, the rules have changed slightly in that nowadays, if you were to apply for a residential mortgage, probably 99 or 99.9% of residential mortgages are now capital repayment, and you probably won't have a choice, it's going to be capital repayment. But in the buy-to-let world, most buy-to-let lenders are still doing interest-only mortgages and expecting you to take out an interest-only mortgage. So should we be going interest-only or capital repayment? This is always the big question, the big dilemma. The argument is now, I've heard put forward, that because of the tax changes with Section 24, Section 24 says that if you own a property in your own name, you can no longer offset mortgage interest against the rent when you're calculating your income tax bill. That will be fully phased in by 2021. That means that there's little advantage in having interest only, so you may as well go capital repayment. That might be the case if you're buying in your own name, but most investors nowadays are buying into a limited company. Why? Because at the time of recording this video, the Section 24 rules do not apply to limited companies. That means that if you have a limited company which holds property, the limited company can offset all of the mortgage interest. Just sort of go over that sort of so glibly. Yeah, all of the mortgage interest can be offset within the limited company when the limited company is calculating corporation tax. So within the limited company, it's still tax efficient to have interest-only mortgages, and that would be a big reason for doing that. Now, why else might we want to have an interest-only mortgage? Well, because it's better for cash flow, because you're only paying the interest, you're not paying down the capital. If you're going to periodically refinance your properties, which you probably are, if you're building a portfolio and if you're a serious property investor, when the market rises, or perhaps you do a refurb and you add value to the property, you're going to refinance. So there's a little point in paying down the mortgage to then refinance to get the money back out. You've got to pay a valuer to go out to value the property. You've got to pay the bank their fees. It'd be easier just to keep the equivalent amount of money and put it in the bank and save it. Why would you want to refinance, by the way? Because you can then use that money to go and buy more property. The money you take out could then become the deposit on more property. Another argument why interest only is a good way of doing property still at the time of doing this video is because of the effects of inflation. Now, the Bank of England are charged with making sure that there is inflation in the economy, at least 2% worth of inflation. That's what they're told they're meant to create, because deflation is worse than inflation, and we need an inflationary economy. So over a period of time, if you hold properties long enough, again, you need to hold properties for the long term and have interest only. Then when you've held the property for 20 years, at the end of the mortgage term, the value of the property hopefully will have more than doubled at the end of 20 years, but the value in real terms of the mortgage will have diminished over the 20 years. So the sort of the gap between the actual value of the loan and the value of the property is going like that over time because of the effects of inflation and because of the effects of house price inflation, which means that at the end of it, when you get to the end of the term, because this is a big argument again against interest only, well, at the end of the term, what happens then? Aren't I having to pay the mortgage back? Well, it all depends on what you want to do. If you've got a sizable portfolio, you could sell off some of the properties and use the sales proceeds to pay off mortgages. Probably what most people are going to do is when they get to the end of the mortgage term, just remortgage, go to another bank, or maybe even stick with the same bank, but just then put it onto another 20-year mortgage. Keep rolling it forward. That would be a possibility as well. And by the way, if by that time the value of the loan in real terms has done that, while the value of the property has done that, then the equity in the property is going to be that much more attractive, which means that remortgaging is probably going to be much easier with the bank anyway. So all of these things are things to think about. I haven't had much time to go into a lot of detail because this is only a short little video, but I hope it gives you a general flavour of what we're thinking and why most property investors are still going for interest only and why most buy-to-let lenders are still offering mainly interest only. So I hope you found this helpful, educational, inspirational, informative. If you did, please don't forget to subscribe, follow or like. If you look down here, depending on which platform you're on, there'll be a button that you can click which will help you to like, follow, subscribe, and then we can keep in touch, and then I can send you even more great property investing content.
Well, I hope you found that informative and inspirational. And if you want help in property, please do come over to my website, www.thepropertyteacher.co.uk. Loads of great resources there, including my blog. There's loads of free videos, loads of great articles. There's free reports to download, including Learning with Peter, where you'll be able to access resources like my video courses, like my ebooks, including my home study course, the Successful Property Investors Strategy Workshop, which I've literally sold thousands of copies of, which takes you through how I started in property, literally with none of my own money, but how I was able to build a portfolio of £2 million worth of property in just 4 years. I'll show you everything that I did right so that you can do the same, and I'll show you everything that I did wrong. I'll tell you about all of my mistakes so that you can avoid them, so that you can progress in property far more quickly than me. Until next time, here's to successful property investing.